Hello, my fellow investors. No matter if you're a passive investor or active investor, a value investor or a speculator, everyone agrees that the most important basic principle in investing is buy low and sell high. The only disagreement is what's the right strategy to do it. So, if you see what's going on with all the banking system and you think to yourself, common sense says there's going to be a great opportunity here, how is the best way to invest right now? Now, if you're a great investor like Warren Buffett, who besides being a great investor is also a banker, and he knows how to analyze banks very good, then you have a problem. How do you know which banks are the good banks to buy? So here is a very simple solution, how to earn money in the current situation. So here's John Templeton. Listen to his story.
And the bargains were there, and we loaded up on them.
Yeah. There's a great story about you, and I just sort of remember it in the back recesses of my mind, where you called up a broker somewhere and said, buy everything on the market.
No, but almost, Charlie.
Almost. And the guy comes back and he says, I bought everything for you, a small number of shares, and all these companies, except those that were bankrupt. Correct. And you called back and said, buy them too?
That's right. Correct, Charlie. Gee, you're well informed. When I got my first job after coming back from Oxford, it was with a company that later turned out to be Merrill Lynch, and I worked for a man there named Dick Platt. And then later when I had my own company, Hitler invaded Poland. Well, it was clear, if ever the companies that are worthless and are losing money ever come back to life, it's during a major world war. So a couple of days after Hitler invaded Poland, I looked over all the New York Stock Exchange and the American Stock Exchange. There were 104 companies whose prices had gone down below $1 a share. And so I called up Dick Platt and said, buy me $100 worth of everything below $1 a share. And he did what you just said. He called back and said, we're doing it, but 37 of them are in bankruptcy. And I said, oh no, those are the best of all. The one outstanding one, Charlie, was the $7 preferred stock of Missouri Pacific Railway. It had gotten down to 12 cents a share. Yeah. It hadn't paid dividends in years, but boy, railroads come back in a war. So we bought 800 shares for $100, and when it got up to 40 times what I paid for it, I sold out and went up to 105.
My goodness.
Okay, so there's one a big difference from then and now, of course, is that buying a share under $1 is outdated. But there's two big differences between the story of John Templeton and what's going on now. First of all, he didn't buy only one industry. He bought the entire market. And like he said, he earned from the railroads, earning a ton of money in the war. And that isn't applicable when you're buying only in one industry. You're buying all the banks, let's say, 100 banks, and a ton of them might lose a lot of money. So that's one difference. The second difference is exactly, he bought it after the World War started. And we're not exactly there right now. So I just want to point out another thing. Is this thing of buying a ton of stocks in one industry, in time of that industry being in a crisis, is also applicable as a great investment opportunity or not? So I wanted you to hear over here what Chuck Akre, he's a great value investor, what his story is saying about Peter Lynch.
And Peter had an unusual, do you all know who Peter Lynch is? He had a really unusual talent. He had 1,200 securities in the Fidelity Magellan Fund. He ran it for 8 or 9 years and had a phenomenal record and so on. But he had 1,200 securities. I mean, imagine, so I was in seeing him one day, and what he would do, we were talking about this earlier, is if he found an industry that he liked, or he would buy every company in that industry, put them in his portfolio, and then he'd eliminate them one at a time as he kept honing in on who were the best ones and so on. It's not a talent that I have.
So you can see also Peter Lynch using the same strategy. When he liked the industry, he used to buy tons of stocks in that industry and then take off all the ones that he thought they were bad and just keep the good ones. So if you're more advanced investor and you know how to read 10Ks and evaluate companies, you can also just buy a ton of banks and just start eliminating all the bad ones. That's another option. Okay, so another major difference between John Templeton's story and what's going on right now as of March 19th, 2023, is that he bought it after Hitler invaded Poland and the World War started and the stock market crashed. We're now in a situation where we don't know what's going to unfold in the next days, weeks, a month. Maybe the stock market is going to crash, maybe not. Maybe the banks are going to be in a crisis, maybe not. So let me show you something. This is Vanguard Financial Index Fund, VFAX. And you can see over here in the height, it was $44. Now it's $37. So that's It went down now a little bit less than 20%. Yeah, you can see here another one, VFH, a Vanguard Financial Index Fund. You can see over here, I think the last month, from $88 to $75 right now. Again, it's less than 20%. Now here's a financial selected sector index, IXMTR. Also, there's a whole financial sector. It's not only banks. It went down from 3,500 to 2,990, 3,000, 3,500 to 3,000. So we're talking about, again, like 15%. Now, if you zoom into the banks, you can see S&P Regional Bank Selected Industry, SPSIRBKT, and went down much more. So that's over here was 3,100 to 2,175. So we're talking about not 30%, but over 25%, if I'm not mistaken, went down. You can see also another one, KRE, this is ETF, not an index. SPDR, S&P Regional Banks, went down from 62 to 43. Again, it's less than 30%. So if you're buying now banks, let's say a ton of banks, you don't know what's the good banks, you say, I'm just buying a ton of banks, and everything's going to be good, you might make a very nice return in the very short term. But if, let's say, it's only the tip of the iceberg what's going on right now, and a ton of banks are going to crash, so you can easily still go down another 30-40%. I have no idea. I have no idea how to predict this, and no one could predict it. So maybe it'll be a smarter time to wait before buying it only on banks. So let's just make a short conclusion. If the stock market is going to crash, you could just do like John Templeton did it, and just buy 100 stocks, $100 each, whatever, how much you want to put inside, and 100 different stocks that went down. So buying under $1 is outdated. You could buy, let's say, any stock that's under $10, or let's say decide to buy any stock that went down under 80 or 90%. That's one option. If you want to zoom in only into the banks, so you can also buy, let's say, 100 different banks and look at the cheapest banks that went down. Now, the simple common sense is, let's say 30-40% of the banks go bankrupt, but the amount of money you're going to earn and the ones that go back is going to be astronomical. So you're going to earn much more on the ones that you earn than the what you lost on the ones that are going to go bankrupt. Now, you can ask a simple question. If we don't know what's going to unfold in the next days, weeks, or month, what's the point of speaking about this now? So I wanted to bring you a short video of Charlie Munger about the investor earns the big money if it's prepared. Now is a good time to do some research, make yourself a list of 100 banks or 100 different companies that are crashing, and to prepare money to decide how much you want to invest in each company if you want to do this strategy. If you don't prepare yourself, then when the time would come for a good investment, you wouldn't be ready for it, you wouldn't have the money for it. You have to prepare yourself psychologically, mentally, and financially to capitalize on these great opportunities. So I just want to show you a short clip of Charlie Munger.
You know, the game in our kind of life is being able to recognize a good idea when you rarely get it, and or when it rarely is presented to you. And I think that's something you have to prepare for over a long period. What is the old saying? That opportunity comes to the prepared mind. And I don't think you can teach people in 2 minutes how to have a prepared mind. But that's the game.
Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.